welcome to everyone at home as well. Glad that you found time to join our webinar today with the topic Investing Money with Selma, everything you need to know to get started, basically. I would suggest that before we officially start, let's give our guest like a brief introduction about ourselves. Patrik, who are you?
Yeah, as you can see on the slide, I'm Patrik. I'm one of the co-founders and the CEO of Selma. On top of that, I already almost 20 years. Yeah, you can see how old you get working in the financial markets in different positions, and that's also my role here today in the webinar, that I can shed some light of what's happening behind the scenes at Selma, how we see investments, and how we build your investment strategy. Yes, but that's enough about me. Niklas, who are you?
Yes, my name is Niklas. I work in the marketing department of Selma since quite some years already. And I might have something in common with most people in this webinar today. I do not have a financial background, which might not be too bad today because I'm not here to answer questions. I'm more here to ask Patrik a couple of questions today. But yes, before we move on to the official part, maybe some words about the technical setup of this webinar. We expect that it's going to last around like 30 to 40 minutes maximum. You also see on the right side on the screen like a small chat function. You might have noticed that not that much happening in this moment. This has a very simple reason. We turned off the public chat. So all messages are just visible for us, for Patrik and for me. And this has a very easy reason. We noticed in the past webinars that many of you have a couple of personal questions that might not want to share it with some strangers in the internet. So feel free to ask us any questions you have. We try to answer them today. If we don't find time today in this webinar, you will get definitely an email the next couple of days from Patrik or from some of our financial experts.
Exactly.
Perfect. But yes, let's move to the official agenda. As mentioned, we're going to talk approximately 30 to 40 minutes. We're going to start to give you a quick overview about Selma, the company itself. Then we're going to move on to Selma's personal investment plan. Afterwards, we talk about everything that happens after you have actually opened the account and transferred some money. So how Selma manages your investments afterwards. We're going to talk about the cost of investing, and last but not least, about the benefits Selma can provide to you. But Patrik, let's get started. I would let you talk from now a bit more.
Sure.
Do you want to share a bit about Selma's team, about the story of Selma itself?
Yes, of course. So we were founded, as you can see, in 2016, so quite a while ago already. The foundation date, I still remember very vividly. That was when we had not much more than a few PowerPoint slides and a good idea. Then we started building the product together with our first contributors in our founder team. So it was just the first founders, then the first employees joined. You were among them, Niklas. Then in 2018, we went live in Switzerland. We went out of our beta phase where we built the product with our first clients, and we have grown quite a bit since then. You can see all the smart faces on this slide that have joined the Selma team. We've grown to over 20 employees, 12,500 clients, and also have gained quite some significant investors into our company, some names that are, I would say, quite known in Switzerland. One of them is TX Group, the media company, formerly called Tamedia, that publishes things like 20 Minuten or Tagesanzeiger and so on. Also is very active in the digital space. And then the other name, I think I don't need to explain who that is. Migros has invested into us and has joined us in our vision to become the leading and the smartest digital assistant for our clients. And that's the short version of it.
Yes, I can just confirm that it was quite a ride the last years since I was part of the first employees actually at Selma. Yes. I often say that Selma is a great solution for many people in Switzerland, but maybe not the best solution for everyone. Usually I always explain Selma's investment philosophy to people who ask, because then they can see if they belong to those kind of people or not. Patrik, do you want to share a bit about what our philosophy is actually?
Yes, Niklas, and it's a great point, right? So I think you can't be the best for everybody, but you can be very, very good for the people that buy into the philosophy that we have. So what Selma is built for? Selma is built for the long term. And what do we mean when we say long term in a sense of investment? That means for money that you don't really need for the next 10 plus years. And why is that so? Because the chances of this investment strategy get better and better as longer as you are invested, because you also have the time to maybe go through a crisis or maybe even two. So that's something that's always happening in the investment markets, and that we and our clients need to be prepared for. Then we have an investment philosophy or an investment strategy that invests globally. That means around the planet into thousands of companies, not into a single one. That also means that we are building an average of all those companies, and that's the performance you get. So we're not trying to go and say, okay, this is the market or the company that will be doing the very best in the next couple of months. And why we're not doing that? Because we also see that's pretty much impossible. That's what the history shows us. Then we tailor your investment strategy to your personal financial situation. Not everybody of us is the same. We heard that from our careers. We are not the same. Everybody in this call is not the same. You have different ages. You have different stages about your development of your wealth. You have different plans and also different needs when it comes to your finances. And then whereas the financial situation is different, also how we handle risk, which is something you get when you invest, is differently. So that means the way you sleep when markets go up or down, how well can you handle that? If you have lost money, do you feel okay, you need to quit and run away from that? Or are you like getting even more excited and saying, yes, let's double down and buy more? So all those things we take into consideration. And then basically to summarize, so what is Selma not, or what can you not expect? We're not as many videos you can find easily on YouTube. We're not promising you to get rich tomorrow, and also not the year after, but we help you to build a very structured plan to build wealth and to get rich slowly but efficiently. And then we're not speculating, so that meaning exactly we're not trying to run after the hot stocks or whatever markets or whatever it is, but giving you a portfolio that is very diversified, very well balanced, and that also has the risk taken into account globally. Yes.
I like the phrase you used, get rich slowly. Maybe we're going to implement it in the marketing team. Who knows?
Let's see.
Good brainstorming meeting so far. Yes, I would suggest we move on and talk a little bit about the core product of Selma, like your personal investment portfolio, your investment plan. Most people in this webinar might have already signed up at selma.com and had a quick chat with Selma, our financial assistant. Selma asks there quite a couple of questions
Yes.
about financial life. It's very detailed, to be honest. Do you want to quickly explain why we are doing that and what kind of things we take a look at exactly?
Yes, sure. So we all almost already jumped into it when we talked about our investment philosophy. So, right, I think what a good banker, or also a good digital banker or a digital assistant, needs to do in the first place before you talk about investment. So before I tell you, so like that, there is often this funny stories when two people meet and that they start about, what have you invested in? Have you invested into crypto? Yes or no? And that's basically the wrong approach. So before we can tell you what kind of a portfolio is good for you, we first need to get to know you, and that's what a good banker should do. And that involves to figure out what is your personal situation. It might be very different. You might just have started to work, have your first income, start to build money over time, or maybe you are going to pension. next year, and that means you start to withdraw money from your from the wealth you have built over time. So we need to figure that out first, and that involves how old you are, what investments you have made, what other investments you might have. So then also how much money you can save every month, all kind of elements that are basically saying if your financial situation is stable or not so stable, if it's good for your age or not. Then we already talked about this. Risk tolerance, I'm just going back again. So, risk tolerance means how you handle risk. Very important that that's connected to your personal situation, your investment horizon. Investment horizon means how long can you invest? We say we build portfolios for the long term. So it's really important for us to know when you say, no, I need this money in like 3 years. So that means we need to build a different investment strategy for you. Existing assets, yes, we talked about that. Then based on this information you have given us, so we've asked you all those questions. Maybe it sounded a little bit frightening. So it's detailed information, but it's done in a couple of minutes, right? So it's not we do like a 2-hour personal investigation, but it's just for us to get a good overview about how your finances are looking like. Then we present this overview back to you. So we say, okay, look, this is what we have captured. You can look at it and say, yes, makes sense. No, I've forgotten something. You can also update this at any time. And any time means if you have opened an account with us, but also if you have are already a client with us. So you can update those information all the time. We get to that later on why this is important. And based on that, then we set up a plan. And that plan tells you how you should invest in that situation. So it looks at your situation and it tells you what investments you should take. It's, as said, it's globally diversified. It's built on top of ETF. ETF are exchange traded funds. It's a very efficient means to invest into the global market. Very basically affordable products, so they're not as expensive as all the crap that the usual bank wants to sell you. But what we're also telling you is should you even invest, how much, over what time frame. So we've seen a couple of clients that they have built cash over 30 years, right? So now they have a big stash of cash, and they think, okay, is it now the right moment? It's the question that we hear quite often, right? So yes, I think I have to start, but is it now a good moment? And one way how you can mitigate that is that you don't invest all your money at the same time. So you can spread that over a certain period. So you not that dependent that now you basically you wake up and you know today is the best day to invest, because you will never figure that out.
So to sum up, the investment plan is actually a combination of advice on how you personally should invest. Like this means how much money you should invest, and also like a portfolio with different kind of investment products, which are based on ETFs, that shows you in what kind of products you should invest your money.
Exactly. And I will tell a little bit more about the products, what they are in a second. What is also important here as an addition is, you might look at this and say, okay, looks good, but I still want to look at this with a human, which is completely valid, even though you use a digital service. So that's also possible. If you say, okay, you want to talk to a financial expert and you want to see if you really have captured your personal financial situation in the right way, you can do that. Yes.
This call is completely for free, right?
That's for free. Yes, that's part of our service that you can do that. Yeah.
And it's important to highlight as well that in this call you can as well give some more personal financial information about yourself, in case there was like no option to add this kind of input to Selma, like the financial assistant online. But yeah, we talk now a bit about like what the investment plan exactly is. But let's go into details, Patrik. how does a portfolio at Selma look like?
Yes, let's go into details. Exactly. So a portfolio at Selma usually has three different elements. And those three different elements we combine in a certain way for our clients. And you can see them here on the left. So the three different elements are, they're called growth, they're called stability, and there is crisis protection. So what does growth means? Growth are investments that, as the name say, grow over time. They're a very typical example of this is a company stock. So you know these examples. If you had invested into Apple like at year X, if you invest into the markets, or if you had invested in the S&P 500 or whatever it is, 50 years ago, it would now have grown to this amount. And that's what happens over time. Markets go up, they go down, you lose money, you win, but over the long term, they grow because the money that all those companies make is reinvested in the market, and that creates value over time. So instead of you working, all those companies that you have invested into, they're working and they're producing this growth over time.
Let's maybe add here as well that stocks are as well risky.
Yes, exactly.
Yeah, if you look back in the year 2000s, where Apple was small, there was also this company called Nokia, which might have not been the best investment at this time. So growth means as well like a bit more risk involved in it.
It means more risk, but what we're doing, that's what I said, right? We're not trying to pick like the Apple or the Nokia. We're investing into the market, and that's by this effect of the single companies that balances out, and you get the growth of the market over time. But there will be fluctuations. There will be crisis, and we come to that. So let's say you're like 1 year before pension. You need this money, you need to start living from that. You're not really like eager to go into a crisis and lose 50% of your money, right? And that's why the other parts of this investment strategy come in. The second one, that is stability. So a usual part of stability, that's with real estate, or then loans to countries. Loans to country means, let's say you are Germany and I'm a client. I give you a loan of 200 million, and you promise me to pay back that loan in 5 years with an interest rate of 3%, or now it's a bit higher, maybe it's 4%. So I give you that loan because Germany and all the other industry nations, they're very stable countries, that the chance that you get that money back is very high, and I get an interest rate for the money I have loaned, but there is no growth potential. So if Germany does really well, you're not going to pay me more. You're just going to pay me what we have agreed. And but this creates stability because it's also an income stream that you can forecast. So we know how much money will we earn with certain products, and that's therefore also part of your portfolio. And then number three, that's crisis protection. Crisis protection, that is, in our case, that's gold and silver. So precious metals, they are kept physical. Physical means like real gold, not just paper gold written somewhere, but actual gold, actual silver in the vaults of UBS and ZKB in Switzerland. And what happens here, gold is not working for you, right? So if like the gold is in a vault and I put a kilo there, in 10 years, it's still a kilo there. Nobody has made more out of it. So it would be like, not just need to make sure that the kilo is still there. But what happens is that whenever there is a crisis, so when we talk about this growth part, the economies, they go up, they go down, there is a pandemic, there is war. Always, or very often when this happens, investors are very emotional. And what happens when you're emotional, you're getting scared, and then people invest in precious metals because they're very safe. They're keeping their value over time. As we said, a kilo of gold has been valuable 1,000 years ago, and it will very likely also still be valuable 1,000 years from now. So it's a store of value that has been proven for years or decades or longer even. So there is a part of your portfolio will not really generate performance and growth, but it does protect you from those crises. And what happens now is that basically Selma takes those elements, takes the growth part, stability part, crisis protection, and based on your personal situation, craft a portfolio out of those different parts. So if you are young, which you seem to be, Niklas, so like young and you have your entire career or a big part of your career in front of you, you will make a lot of money throughout your career, then you can likely invest much more into growth, because you can also compensate with your job if you lose in your investments, as if you would be like 70 and you have no more income sources and you basically just want to enjoy your life on a nice mountain or island. I don't know what your preference is, and need to like consume money out of your wealth. Then we would likely be more on the stability side, where we can see that we generate income for you out of the money that you have generated.
Okay. Patrik, thank you for the explanation. I think we went quite a bit into detail. So I would suggest we move on to the next part, which would be then the management part of the portfolio itself. But before we go there, let's quickly talk about Selma's 3A solution, because this is a side product we offer.
Yeah, I mean, I wouldn't call it a side product. So I think it's just a product that also fits very well together with our investment account. So we offer both. We offer an investment account that is like for your free cash, and then it's Pillar 3A, that is a tax optimized product where that you can open voluntarily. You can also just have the Pillar 3A with us, but it does make sense to combine them. We can also see that when we go to the fees that you pay. So that's a very important part because we're, I think, as far as I know, the only provider that basically when you start combining the different elements at Selma, where you get a better price.
Mm. But yes,
and yeah, it's also part of your personalized plan.
So
basically.
the plan is adjusted to your risk ability.
Exactly, yes.
But yes, one another core aspect of Selma's service is that we take care of managing your investments after you've opened your account. And maybe here comes already my first question. Why do you even need to manage a portfolio? Because often you hear when you talk with your friends, just buy and hold and never touch it anymore until you are old and gray. And this is the best strategy you can choose. Is this correct, or is this kind of a myth?
It's an excellent question, to be honest. So first, I mean, buy and hold is, I think, a very important and already a good concept, because it has a very important element in there, or basically two important elements. So like the two important elements are the buy and the hold. So buy means you have decided that you want to take the investment markets and use them to your advantage. Mm-hmm. So you have decided, okay, you're going to take certain risk. Your money is not going to just lie on the bank account, but you start to benefit from this effect over time that we have discussed with growth. So your assets and your wealth can grow over time because somebody else is working for you and not just you. Mm-hmm. Then number two is the hold. Also excellent basically concept, because it means you're in there for the long term, right? Because otherwise you wouldn't not. Otherwise you would be called buy and sell, or like buy and spend or whatever. So those two elements are excellent parts. If you remember what we have discussed just before, is that unfortunately your life doesn't really stay the same over time. So like from the young dynamic Niklas, you're gonna become an older and wiser Niklas over time, and maybe also a wealthier Niklas over time. And that requires certain shifts. And we talked about those shifts. It requires shifting a certain part of your money from growth into stability. You might want to have a bigger risk layer in there. And also then the markets don't really stay as they are. So there's certain adjustments that are very beneficial over time, and we will come to discuss about what those adjustments are. What you shouldn't do, I think, like, and then we've seen that in the financial market. I've seen that when I've been like a young banker, and I thought I'm like an excellent trader. So like we bought and sold every day. So not the buy and hold, was not very lucrative, was very lucrative for the bank because they charged us a lot of fees. Usually doesn't work very well over time. So there are certain adjustments, not that many. Buy and hold, certainly a valid strategy.
Okay, so Selma's strategy is pretty much buy, adjust, and hold.
Yes.
Yes, but let's move in like what this actually means. Like, when is Selma adjusting your portfolio for you, for the client?
Yes. So number one, this is about you. So it's whenever there is a significant change in your life. So and significant, that means, doesn't mean you earn like 20 Swiss francs more per month, but you might have bought real estate, or you might have had big expenses. You go like into pension. Your wealth has shifted over time significantly. And what Selma makes sure is that over time, in small steps, your investment strategy also is adjusted with your life, right? So it's not like this that you say, okay, like now I'm 65 and now I'm changing everything, and you do a big step. But what we do is we do very small steps in your strategy over time, so that it basically lives with you, that you get a portfolio that develops while you develop. It also develops with you. If there are bigger changes, so if you win the lottery tomorrow, maybe there is a bigger shift we need to do at once. But usually our lives, they develop quite organically, right? So there is like maybe 1, 2, 3 bigger things, but usually we just like goes on. And that's what Selma does, and makes those adjustments.
And everything what a client needs to do is pretty much to keep Selma up to date. And this happens within the mobile app or on a web service, where you can simply update your investor profile to give Selma all the information that are needed in order to make like changes if they have to make some adjustments to your portfolio.
Yes, and it can actually very often be that we say, okay, there are no changes required. But what I would recommend, that at least once a year, you might open your mobile app more often. At least I do. But at least once a year, you also look at your profile and you say, okay, is this still correct? Are there bigger shifts? And then you update it, and it's done in a couple of seconds. And then if there are changes required, we do them for you. Doesn't cost you anything. It's very fast. And,
like a financial health check.
Exactly, yes.
Perfect.
It's maybe also like for you, when you go through your finances, right, you can make it part of your habits to look at your profile and says, yes, this is up to date. Yeah.
As you mentioned, there are always two parts that change in the world of investing. It's your personal financial life, but maybe the more interesting part is the financial market, which seems to change on a monthly basis, a weekly basis, and crises come. There are some moments where it goes up and down, and it's hard to take track what's really happening. What is Selma doing there exactly?
I mean, the financial markets change every day, right?
Yeah,
and basically your bank, they also want you to change your investment strategy every day, because that's how they make the cash. So it's like the casino, they want you to play. But that's not what we do. So what we do is basically we invest in this global growth portfolio, and we look what economies are represented, and how should you invest to become a truly global investor into an efficient portfolio that exactly covers the world. That's the baseline what we do. Then we talked about this, investors are emotional, right? So there is always the ones that go like, we've seen that they're the trends, and then everybody invests into the same thing, and then things are getting too expensive. So we've seen in the investment market always the bubbles building. So, and then we've also seen maybe some areas where they were just overlooked, right? There is like this certain parts of the market that people just don't find as attractive at the moment, and that you can get for cheap. And that's what Selma looks at, the basis of different markets. We look how much profits they have created or do create actually, and then we see how much you pay for those profits. So, and we look if they're like overheated or undervalued. So the exact word is over or undervalued. And then we invest more in the markets that might not be so attractive right now, but that have good figures and have therefore good upside potential. And in the ones that bubble, there we take money out and invest a little bit less there, because over time, all those like over and under reactions, they have gone back to their average, right? Mm-hmm. So and that's again, as I said before, it's a long-term strategy, because those bubbles, they can sometimes like they can be there for a while, right? So before they burst. So it means the prices can go further up, and you will tell me, why the hell have you not invested into this? It's been very good. The reason for that is that we are a bit more cautious. We go out of there, we invest in the things that are maybe a bit overlooked. And invest in there cheaply, because we're convinced with the long-term strategy that will pay out, because those things are going back to the average.
Is this strategy, was this created by you personally, Patrik, or where does this strategy?
No, I guess if it would have been, I would not be in this call, because the people that developed that, they won a Nobel Prize. So, well, maybe I would still be in the call, I don't know. But the guy that developed this is his name is Schiller. Robert Schiller, he's a professor, a finance professor. The concept we use for this is called CAPES, or Schiller Capes. That stands for cyclically adjusted price earnings. And that means what I told you before. We look at how much profits the markets generate and how expensive they are in comparison to the profits. Then out of that, the economical cycles are calculated out, because there's some industries that do good in certain cycles. But
we go into details quite a bit, right?
Yes, exactly. So I think we also do have some content on our blog.
Yes.
You can see I'm very excited about this. I could talk about this for hours, but maybe let's go to the next.
Yes. So just to sum up, I think it's important to mention that, like as Patrik mentioned, those concepts are not created by us, but we built our strategy based on concepts that have proven in the past to work properly and have won prizes because they worked in the past, right?
Yes.
Yes. Perfect. We are already at minute 32, so a bit over the time, and we still have a couple of topics to talk. So I would suggest let's move on to the next part. Is a very important topic in the financial world and investing in general. I think everybody who has ever invested knows that there might be some costs which you might not be aware about. Patrik, how's the price at Selma?
Yes, so the price I think is very affordable. We also, when we looked at the comparison that somebody did in Switzerland, when it comes to providers, digital providers that also give you advice with your investment, we're actually the cheapest one. It's dependent on how much you invest. We have said that before. So if you have your pillar 3A and your investments at Selma, you can reach a cheaper pricing tier. Also, when you build your investments over time with Selma, you can get to a cheaper pricing tier. And I think important for you, you can basically go to our homepage or to our price, and you can fill in your personal numbers. This looks very complicated with the percentages, and the percentages is something like that the financial industry uses to confuse you. So you can go in there, and then you're going to see the price in Swiss francs, and you're going to see how much you pay every year.
I think the important thing to highlight as well, that we at Selma, we do not have like hidden fees at all. So there are no extra fees that come up, like when you, for example, close the account, or when you add something, or you set up a monthly savings plan. Pretty much you just pay the fixed amount per year, and that's it, right?
I mean, there is the classics that you pay for the tax report, or that they pay for like an account fee, or you pay like an investment fee and the disinvestment fee, and then the bank has their own funds in there that are very expensive. So there are tons of practices that are used to get you confused and to like basically tell you that it's cheap, but then it's not really that much. Also very important here to tell that we don't take kickbacks. Kickbacks means that we are not incentivized by somebody to use their products, their ETFs, which a lot of asset managers still do. If you have one, ask them for it. pro tip, like if they take kickbacks, and maybe you have even signed a form at some point that you're not aware about, and then you ask them how much it is, and likely will be quite a lot. So that means we're not getting anything from anybody, and we are free to select the best products on the market. Yeah, all the things that you need basically are included in that fee. And I would recommend you go to our pricing page. As said, there was also this independent review where we've turned out as the cheapest when you look a little bit deeper at all the costs involved. I would just say do your own research about that as well. It's important fees to accumulate over time.
And we have nothing to hide when it comes to fees.
No, we don't have anything to hide.
And as well, like small pro tip, we have a blog at Selma where we have a couple of price comparisons. So you see as well like how much a similar solution at the local Swiss bank would cost like, and to spoil the solution, and we are a bit cheaper than them.
A bit, yeah.
Yeah. Okay. Perfect. But yes, let's move on to the final part of this webinar. Last but not least, the benefits. Maybe just like a quick recap, like when Selma would be a good solution for you, like how Selma can help you. Again, Patrik, I let you talk.
Yes. So I hope some of those points already came through when we talked about the investment strategy. So basically it says on the left hand, no time. That means like you do not need any time. You don't need to stress. All the things that you need are done for you. You get to have an investment plan in a few minutes. Things are automated. We produce content, and our articles and our market updates are, at least I hope so, maybe you can confirm that more than I do, written in a language that also you can understand if you're not a financial professor and if you have not won the Nobel Prize in finance. So you don't need pro expertise to understand what's going on. And as I said, we're independent. There is no bank behind Selma that owns us and that pushes us to sell something. We can go to the market and select the best product, and we only get paid by our clients.
Maybe one quick thing, by no time, I think you can get through from signing up to opening the account in maybe less than 7-8 minutes. So it's a pretty fast process.
Yes, if you're fast, but I mean, take your time. It's about your finances. Take your time, think about it. But basically, it's also you can get the account. So if you if you start the day, so if you tomorrow morning wake up and say you want to do this, you can be done within a day with like money transferred, invested, done.
No time, no stress, no problem. I like that. Maybe as well the next slogan on our webpage. Perfect. Next one is the all-in-one solution.
Yes. We said, so we offer investment accounts, we offer Pillar 3A. You can get all of those in one app. So you have a complete overview. You get the tax statements automatically into your Selma account when the year starts for the last year. So you can easily download them, no extra cost for that. There is advice. So there is tips and tricks in our app. There is also explanations in our app where we give you background information about what's going on in an easy language, but there is also personal advice. All of that in this one app.
And yeah, you mentioned already digital, but personal advice. What do you mean exactly?
That means that our personal pro tips in your app. So if you update your profile, we talked about that, we might see, or Selma, our algorithm might see something. So we recognize, okay, you hold too much cash for your situation or other things. And we give you tips and tricks about that in our app. You receive market updates. So we do tell you what's happening on the market. So you can basically you can just relax. We try to distill out of the noise that's happening every day. We try to distill the things that are really relevant, so the things that move the financial markets. I think you also get to build some knowledge over time. We've also seen that. So, right, we had some people that started with Selma, and then they started to trade on their own because they wanted to learn. Then they came back again because it was taking too much time. So we are not afraid to also give you the knowledge which maybe the usual providers not wanna do. So we try to also help you to understand your personal financial situation better. And then on top of that, there is also people behind the Selma. It's me, but also other financial experts. There is a live support with friendly people that try to assist you with whatever questions you might have. So yeah, only
Perfect.
one chat away.
I think we're pretty much on time, Patrik. It's exactly 40 minutes since we started.
That's what we said, right?
Yes, we never said 30 minutes. We always talk about 40 minutes. But maybe one last question before we let everyone go,
Yes.
like from the screens. Timing, market timing, or better say, many people might ask themselves, is today a good time to invest? What would you answer in this case?
I would say yes in general. So no, I would say it depends, but generally the answer is yes. So it depends on your personal situation. So if you have money that you don't need for the long run, and now we're back to our investment philosophy. So if you say you have money that can sit for 10 years, yes, do it. The chances that you will have more in 10 years than you have now are very, very high. So the chances that you lose money over a long time frame, because of what I explained, so all those companies are working for you. Some of them might go bust, right? Some of them disappear, new start, so you lose money also on the way. But this effect of thousands of companies working to you and growing money for you over the time frame of 10 years, even if you have invested at a very bad moment. So let's say you invest today, tomorrow is a crisis. Over 10 years, it's very likely that this will flatten out and that you will have more money than you have now. So yes, if you have a long-term vision, yes. If you say you want to use this money in half a year to go to the Bahamas and spend it all, then don't invest it. Not now, but also not tomorrow.
Perfect. I think those are perfect closing words. So if you plan to go to Bahamas, Selma might not be the right solution at the moment. If not, it's the perfect place for you. As mentioned at the beginning, feel free to ask us questions. And if we did not answer your questions in this webinar right now, Patrik personally will answer them very soon.
Yeah, let's see how hard the questions are. So
perfect. Cool, Patrik, thank you very much. And thank you for everyone at home listening.
Thank you very much for listening. See you soon. Bye-bye.